Okay, daily trading recap. It is Thursday, the 10th of March, 2022. Stacking on just little tiny green days, day by day. Just learning from kind of little stupid trades today on IMPP and HYMC. I'll get into those in a little bit, but pressing harder still on these future trading strategies of volatility opportunities that are there and pressing harder. Finally getting a little small victory, not in my full automated strategy mode that I want to be at or understanding how this NinjaTrader system works, but got a little tiny step today in advancement of getting one live trade through that automated strategy. So it's just an interesting little buggery system that way. But yeah, just putting more research into that. And I think there's more, finding more. As I'm pushing this more and more, I'm finding more things that I don't know, that I didn't know going in. So love being able to explore that as well. Just overall market SPY, 0.5% day in the red here. CPI news coming out at 6:30, 8:30 Eastern time frame there. Thought it was going to be a little bit more harder of a trend day based off of that, but sure enough, it got a little bit volatile or spread-ish style of trading day today, or a non-trending day today. And I was just talking to myself even before this video just about reflecting back on my 15 to 30 minutes after that market open volatility spread trade, and just of how I was trying to look at it in the sense of, okay, backtested data that I have says there's like a 95% chance that we go 2 points above and 2 points below the open price. If I just get both long and short, and I can set profit targets there, that we go into that. But then there's like a 75% chance that we can get like a 5% or 5 points both above and below the open from that open price. And that's just totally relative. That's not specific to today. I'm just making those numbers up on the fly, but similar numbers that I have on that from that data that play into this. And how I tried to approach it was, okay, well, 75% chance. Oh, well, maybe I could try and layer a spread, like layer levels into the spread trade of I'm more convicted in getting both 1 point above and 1 point below. So I'll place a trade for that. And also at the same time, I'll get entries to also play for that 5 points above and 5 points below. Or I think you used 2 points above in that example. But regardless of, hey, I'm more convicted in this, or obviously the probability is higher for this setup, but I also have enough margin, luckily, that I can play another level on top of it to try and get a little bit more. But then the harsh reality of that strategy came to fruition that on those days that it just didn't have even any opportunity to one side or the other, whether it didn't go 2 points to the upside or 2 points to the downside of the open, that leg of those trades I was just now doubly in the red, multiplied of what I would be if I had only just taken one side. And so what I'm learning is the conviction for that trade, or trying to actually maximize what this trade should be and keep the risk reward quite suitable for a repeatable, consistent type of strategy each morning. I almost have to be looking at it trying to maximize the full day, because say I come into the day thinking, okay, I'm going to get both long and short right at the open, and I'm going to try for 30 points both ways. So if we look at just ES in relation to that today, of 30 points, setting profit targets for both long and short below the open, getting it to 9:30 here, just taking it from Eastern market hours, saying that, okay, 4230 is our opening price here, is our filled price, that we're both long and short sitting there. And then we have profit targets 30 points away, 4260 and 42, what would that be? 4200. So we don't get filled to the short side with that profit target. So we don't even reach our long end until we get to, this would be 2:48 Eastern time. We're filled on the long, but sure enough, it does have a pullback, and it does end up going past that even more. So we would have actually been in the red in that position, but that would have been 5 points against me. Covering that long target at 4260, it spikes to 426. What's the height here? 42675. So 7.5 points versus if we take away, trying to reflect this in my mind to put it, not really comparing it to the best example of this day, but trying to force a trade when I feel less on the days that it doesn't have a specific direction the other way, the opposite way of the trade. If it doesn't offer anything, if it just immediately out of the open goes one way or the other and doesn't offer anything below there, on those days, it is just so pointless for me to have taken any type of small trade, because, what's that profit offsetting? So in the example of, okay, well, There's a 95% chance that we could have 1 point both above and below the open, but if it's that 5% day that it does just immediately rip and offer nothing below, even throughout the entire intraday, that's the type of risk I was opening myself up to. In keeping that in mind, now that type of chart day, even though it becomes a full trend day, that 5% day, even though that becomes a full trend day, and say it goes 60 points against me. Now, instead, I'm taking my profits with that same example of, okay, now I'm trying to go like 30 points above and below the open. Now I've taken that profit at the 30 points above and say I just continue to hold on and it still goes 60 points against me. This is just totally arbitrary example. Well, now I'm down 30 points on that day versus the 59 points that I would have been against me had I only tried to go for both 1 point above and below the open. So this strategy has really taken on a different ideology or perspective for my own mind after I realized that of if I'm trying to trade volatility and I'm not as convicted or I really think it's going to be a trend day type of day that is just going to offer nothing to one side or the other immediately from that first minute of market open, it is just so stupid of me to try and, in the way of limiting that downside, to minimize my profit target window. It's more beneficial for me to actually increase that profit target window to try and force the lever, because even if I don't get filled to both sides, even if it trades between where my profit targets are on both sides, then I'm still net neutral by the day's close. I'm down $2 in commission for that, right? Or whatever it is. So I think, even just talking to myself, it's very different perspective. And I don't think I have any hard plans to start trading on that type of thesis, but in my quest to try and understand more so, hey, when are trend days in the market more likely? As I'm doing with testing my little, after 15 or 30 minutes after the market open of saying, okay, hey, I think it could go up from here, taking one MES contract, whatever direction I think it's going to go, and just letting it play out and do that. Like the day we saw, was that Monday? I think it was that type of trend day that I talked about. No, Tuesday? Yeah, Monday that we had of. Those are the types of trades of just sitting on one MES contract for the entire day. That is beautiful risk. And at any point, I'm setting my profit or my stop at break even. So should it come against me like it did on Tuesday, I think I did a similar type of thing. I was setting it short, I think, if I remember correctly, as it was breaking here. And sure enough, as it has a sharp V, but eventually ends up continuing on against me, I'm still break even on that trade. So it's that setup of just for that educational experience of trying to understand the trend and directional types of days on the overall market of the S&P 500. Now I'm stepping into more of understanding when are the volatile days coming. And now that I'm expanding this strategy and kind of understanding the underlyings of it even more, of how to maximize the profits and better preset my risk reward in the trade versus just kind of being succumbed to the whim of wherever the market wants to go on the day, maximizing that risk reward and being in a much cleaner, safer setup by pushing the boundaries of what my profit targets are, which is kind of counterintuitive coming from that small cap and OTC sector of saying like, well, you're trying to minimize your losses, your risk reward, so you're going to set your profit target like higher away. It is kind of counterintuitive a little bit, but I think that's the eventual next steps that I see for that specific trade that I'm kind of evolved a little bit more to in the automated strategies and just fooling around with those as of right now. But that was a long-winded introduction for that. I'd also have market dollar volume just for reference for me. We are just an hour after the close here. NASDAQ $234 billion volume, NYSE $342 billion volume on the day. OTC's $2.7 billion volume on the day. So, also reference, I was playing that little half a point within that first minute of morning volatility. Was that today? Yeah, that's today. Playing for that little half point above the open price, playing 2 ES contracts on that, securing a nice little $50. It's kind of cheeky, and it gets me eager, and I did it today too, trying to, when I get in that mindset of just when it becomes so easy because of the backtested data I've done within that first minute, that 9:30 a.m. candle of pushing that button, and immediately after I push that button, I hear the sound that my order's filled, and I see $50 showing on the account size. Then that I did it today, that kind of bleeds into the mindset that, anytime I push this specific button on this specific chart, it just automatically makes me money. So then I have this feeling or kind of confidence, I want to call it, that, I can just do this anytime I see something, and it just automatically makes me money. And I fell into that a little bit. I got up to $100 in profit. I did it again and nailed another $50. and then tried it a third time for whatever reason that I was coming in and out and thought I was seeing something and ended up pulling it back perfectly to zero. I didn't go red, but pulled it back perfectly to zero and then found my way back to another one that I said, I need to put down the shovel. This is how I got into that $1,000 loss day, whichever day that was, of doing that exact same thing, fooling around with these ES contracts. Luckily, I was far downsizing the profit target I was going for, so it was much more likely that I was getting filled today. But gosh, never again. And that reflection on that, too, that is not the type of trader I want to be. And that's not how I'm going to make $1 million. That's not how I'm going to get to where I want to go with the account size that I want to be trading in. Yeah, it's not a profitable scalping strategy either, especially for me to be sitting there constantly looking at it. For the amount of time I was staring at that screen trying to do that, just very stupid that way. So I think a lot of building blocks, stepping stones to be going on today on those specific trades, the ES trades, and then also on these trades that I'll talk about here on IMPP and HYMC. So to kick it off again, IMPP just took both of these very small size again. The max size I took in this one was 20 shares. I think I was 2 times in and out on this. But I alluded to this a little bit yesterday that IMPP for me is kind of the leader. There's a lot of tickers in this oil and gas hot sector. But this one, just for some reason, because it was a little bit cheaper. I mean, all of these were kind of relatively in the same price range except for INDO. But they were just, MPP kind of had that little bit of favoritism or a little bit of bias in my view. I loved on the intraday perspective here, the little lines that we can see. Call it how it's holding or putting in these highs, lows, especially on the low side here. If I could draw a line for just how it's holding. The obvious trade that's far better is in pre-market here, getting in anywhere around that candle entry there. If I was looking at it during that pre-market time of establishing a position to be sitting on this for playing that exact wedge trade, not playing it off of the actual commodity of oil itself, which I think did have a little bit of a tank today. Tank. But yeah, that obviously would have been the A+ setup, the entry for this trade for me to say, hey, it's bringing to the upside of this little obvious range here that it's trading. So to be playing off of that, but kind of got caught up in again of the little bit of this hysteria. And even if I want to call it a second entry position, if I was trying to trade this little morning spikeage, any craziness within that first 15 minutes of everybody figuring out where they're going to go, I mean, this second candle, this little bottom here, as it's coming just bouncing off of 5.5 and this little VWAP area, call it a little dip and rib. It's obviously very quick and right away, but that would have been a far greater entry than what I was trying to do of chase it with these little tiny 10 and 5 share positions that, hey, it's holding. I'm not trying to force more out of this trade than is there. I certainly think there is opportunity. But gosh, even still, as I was pushing those buttons, I knew it was not the most opportune entries or trade in general. And sure enough, I got caught. 580 became a level on the ask that was starting to show some resistance. Did break through the upside of there and then eventually broke through $6 within this candle, I believe. And then out of nowhere just got absolutely smacked with a hammer within this candle, but ended up turning green before this minute candle closed. Got back in again after my little stupid exit on that one. Had a little bit more room to the upside to create a new high of day, but then sure enough just started selling off after there. So this one was a little bit of secondary break even. I think I had $4 loss in total that I took on it, but certainly pay that for the educational lesson that I took on it, that whatever I was doing outside of looking at other charts or doing my other data collections, still during this pre-market identifying, oh shoot, okay, that was an opportune time that you could have called, or what I should have been looking for. I want to say, just for reference of the best. I don't even know where I'm going with that. Hey, that's where the best spot would have been. And now coming into today of saying, okay, not trying to force anything chasey, especially knowing that it wasn't going to take big size on it. That just this is very low probability of this just continuing to rip, but I thought I had the opportunity and cut losses quickly as they showed themselves. So being able to pay that little loss for more time and sales, more tape reading on the day, I'll take it, whatever it is. HYMC, third day play, again, very small size. I wanted to take a little bit bigger size to play this third day play in my book. Obviously ripped crazily here in the afternoon session, but as I realized I was chasing, again, similar to IMPP, within that very first minute candle, sized myself way down, took it to 50 shares. It got a little bit chasey again with the entry, shoulda, coulda, would have been playing more still, or been more on top of it to realize, hey, the bid stacking here, or hey, we're pressing the ask. We could get some more push through, but kind of fell off at 85, just below 85 there, and just immediately tanked against, and did not offer anything left for the morning session. So this trade was solely based off of that just third day sentiment, 18 million floater that I'm seeing here. It is a mining company, so basic materials company that I'm seeing, gold mining. It was a little kind of attached to a semi-hot sector, not going hard off of that it's in the energy sector, but of just, hey, it's kind of was still in that same realm. It did have a nice little first day there that was still holding decently, kind of sold off pretty hard immediately after the gate opened on that first day for Tuesday, and second day was a little bit more of a sell-off and rest day as well, but pre-market today was looking decent, not the craziest amount of dilution that I saw, a few warrants out there, but just playing off of that. And I think this was definitely a step for me that I have not done in a long time, of knowing what position size I was willing to take for this type of trade, and kind of kicking myself that I should maybe establish a little bit of a position here in pre-market as it's pulling back under VWAP, developing a little base under 76, but just wasn't so convicted to be taking it right then, saying, hey, let's let the chart develop. Let's get an actual confirmed trade opportunity before we get into it. So that's why I took the 50 shares on the chase trade there for the entry. But yeah, learning lessons all around. And then, what I was alluding to was that step for me that I haven't really taken before, of knowing when I'm chasing and saying, okay, well, I can't take that big of a size anymore. I need to size myself way back down. And just took whatever little scalpy loss I took as it was breaking against me there. And the trade was saying, okay, there is no more continuation. We are selling off hard here. And that was really all she wrote. I could have seen maybe some more. I could have potentially seen it maybe holding a little bit if it was going to have any more sentiment for the morning session at least. But it just sold off and broke to new lows here within that 9:37 minute candle there. But sure enough, reclaimed incredibly nicely for the afternoon, closing very strong, tapping just under 1.7 in the after hours. We'll be keeping an eye on it. Not sure of any specific trading plans on it for the next few days, but it looks like it's going to be short sale. Could be short sale restricted tomorrow as well. Won't be short sale restricted tomorrow. That's a lie, because it was short sale restricted the last opportunity today. No really hard scans, just very preliminary glancing at the scanners here in the pre-market, but I'm going to do more in the afternoon session with some other stuff. But that is all I had. Just little updates, and going to do more research again, like I mentioned to, on the futures data, backtesting, automated types of trading that way. I'm excited for that and excited to continue to get after it. I sincerely thank you guys for watching. We will catch you guys on the next one.